Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at the 10 fastest growing industries in Australia. Then we'll get into the Australian stock market so I can share with you my thoughts along with where it's heading and answering your questions as well as looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday 7 to 8 p.m. Australian Eastern Time, because this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now, since the start of the COVID-19 pandemic almost 18 months ago, many areas of our lives have changed, and there's also been significant changes in regards to industry and how we do business, which has had a direct correlation on the stock market. So I thought I'd investigate the fastest growing industries in 2021 to see what changes are occurring and where opportunities may lie in the future. Now, research by IBIS World about the 10 fastest growing industries in Australia by revenue growth reveals some quite interesting results. Number one on the list is rice growing, which is up 403%, followed by cotton growing, up 240%, whilst telehealth is up 169%. Now, of the top 10, 50% are related to primary production or wholesaling of various grains together with cotton. 4 of the top 10 are involved in online retail sales, with online grocery sales at number 6, and that's up 47%, whilst home furnishing sales is at number 8, and surprisingly, men's clothing is up at number 9, and that is up 33%. Now, this could imply that until recently men preferred to visit a store rather than buy online, which really does make sense given that men tend to be destination shoppers. Now, rounding out the list at number 10 is baby products, with sales up 29%. So how does all of this relate to the Australian stock market? Well, almost 50% of the top 10 either grow or sell grains. Therefore, companies such as GrainCorp may be benefiting from the surge in revenue growth, as might Elders, whose agribusiness provides services to the wider farming community. In regards to online shopping for home furnishings, we have listed stocks such as Temple & Webster, Beacon Lighting, Fantastic Furniture, together with the big brands like Myer, David Jones, Harvey Norman and the likes. Now, when looking at men's clothing, there are many listed companies that now provide online ordering, and I'm sure I don't need to remind you, parents, about Baby Bunting, which is also listed on the ASX. So whilst I'm not suggesting that investors should rush out and buy these companies right now, the research is showing that these stocks are benefiting from the changed economic climate. So whilst everyone needs to do their own research as to how each company is benefiting and the likely outcome in terms of share price growth, the research does tell us where to start looking. Now it's time to get into looking at the Australian stock market, and as usual, we'll start out what were the best and worst performing sectors last week. The best performing sectors this week included information technology up 13.69%, followed by financials up 3.08%, and consumer staples, and that was up 2.91%. The worst performing sectors included materials down 1.85%, followed by industrials up 0.65%, and energy, that was up 0.74%. The best performers in the ASX S&P top 100 stocks included Afterpay, which was up 36.72% on news of a takeover by US company Square. Now, this was followed up by WiseTech up 7.6%, with ASX and Xero both up 3% last week. The worst performing stocks included Fortescue Metals, and that was down 7.47%, followed by Mineral Resources down 6.44%, and Oz Minerals, and that was down 3.28% last week. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, again, we had an interesting market last week, and it was sort of a tale of two parts, with Monday our market taking off like a rocket after the Afterpay announcement where Square said it was going to take over Afterpay, which saw our market really rise strongly on Monday. But it was pretty much flat for the rest of the week. But I think with Afterpay, is about just under 0.5% of our All Ordinaries index. And so that big rise of Afterpay over 30%, I think that was a lot to do with our market rising. But it is looking quite good at the moment. But let's go and have a look at the charts. Now on your screen is my normal workbook, basically, where you can see the monthly chart on the left and the weekly chart on the right. And I know I have been saying I did hope that the market would be closing above that all-important sort of 7,600 odd point level for it to move up through to that 8,000 and possibly up to that 8,600 point level that I was thinking of if it did break these levels, because that sort of 7,600 level was a bit of resistance through here, holding back in there July, but August is looking good. Now let's go over to the weekly chart and have a look and see what we're seeing. And you can see the market is still tracking along that thick grey line there, which has moved up. This was last week, opening on its low there, 7,664, trading up really strongly, 142 point move. Massive move, closing on its high for the week at 7,806, making a new all-time high at the same time there. But looking at this, if I go back 142 point range, there's another big one there that was 350 point range. So that was another big range back through there. That was what we're talking about. That's February. So look through here and look at this, if there's another 142 point, 196 is twice. We've had a big range, 185 there and 181, so it's a pretty big range moving through there. But it'll be interesting to see whether we do exactly what we've done through here. So we move up sideways, so here we've moved up sideways, here we moved up sideways, here we moved up sideways. So it'll be interesting to see whether we can continue on this run. It will just depend on what companies are doing with their earnings growth, and looking at COVID situation here, where this weekend or this past weekend, half of Australia's in lockdown. Restrictions are getting tighter again in Sydney. They're not under control there at all. Obviously I'm in Melbourne here, and when the government said, well, we're going to go into a 7-day lockdown, I don't think anybody in Melbourne would have believed what that was. We all knew it was going to be 2 to 3 weeks. That was just going to happen. They were just telling us 7 days. And at this stage, I can't see any reason why they would change it from being at least 2 weeks. But hey, who knows? Miracles can actually happen. But that, again, it slows down industry. It slows down all sorts of areas of our market. Whilst we still can order online and some of our essential things we're getting, we're seeing a lot of hurt across businesses. Obviously, Qantas and Virgin are now laying off staff and getting rid of staff. So there's a flow-on effect from that. So it'll be interesting to see what happens in the rest of the year. But 8,600 points still is possible. And if I use my little tool here, and I'll tell you how possible. So looking at 8,600 points, you're talking about another 10% in our market. Now, I am still expecting the market to come into a low. Now, whilst the market is technically bullish, we're not talking about it being strongly bullish. It's just trundling along there quite nicely. So whilst I was expecting a low earlier on in this year over the last sort of 4 months, but it just really hasn't gone down. We haven't had any sort of decent retracements on our market at all since the COVID low. That was a nice big retracement with all these little retracements here really not fitting the bill in terms of what I'd be expecting. There's 6-7% there. Let me put another one on here. Here we've got another 4.4%, and even click on it, and even down through here we're talking about there's 2.32%. Normally we'd be seeing pullbacks of somewhere 8 to 12% through this sort of whole period, and we're not getting those. So that's what worries me a little bit. And that's why I'm saying we could be getting right to the end of that seesaw before it falls over, because possibility what could happen here, if I got my little trend arrow, we could be seeing move up and then a move down sometime between now and probably September, October, in sort of that bracket there. So how far it gets through here, I'm not sure. But again, that's what I was saying is if you start buying stock now, you could be buying just before a peak, before it falls over. Now, the point is, a lot of people may not understand this, going, well, what do I do? do I not buy or do I buy? Well, yes, you still can buy, but that's what I've been saying and what Janine and I have been talking about is you being a little bit more careful about what you're buying. Don't buy stocks that have already run. Like trying to buy Afterpay now is just not smart. It's already done its run. If you own it, stay with it at the moment. I think it's a really good looking stock at the moment. Square, it takes over. Basically, the decision is, do you want to own stock in Square when it lists on the Australian Stock Exchange? So it will be dual listing with the Australian Stock Exchange, which means it'll be still listed in the US, but it'll be also listed on the ASX, and you'll be able to buy and sell Square on the US company Square on the Australian Stock Exchange. It just depends on whether you want to own that stock as well. So at this point in time, I don't see why there'd be any reason if you're more of a medium term to longer term investor that you wouldn't take that offer. If you're a little bit more short term or short term trader, then you probably take your money off the table and exit out of Afterpay, because there's no more real upside on Afterpay at all now, because obviously the offer with Square, the only way that might change is if the deal didn't go through for some reason, and at that point in time you're likely to see Afterpay fall away. So that's part of the issue there. But if you are more of a short-term trader, you might take your money, move it into another stock for the foreseeable future, because you'll probably get better returns out of that. But again, a lot of people may want to own Square, and I do understand people may wanting to own that stock. But right now I think the market is in that position where it's not strongly bullish, but it's not, to me it is getting to that end where we do need to have some sort of move down. But it wouldn't surprise me if it did move right through that 8,000 point over the coming weeks, and then maybe into next month we might start to fall down into September, October, because the US market is a bit overheated as well. But that's it for my take on the market today. So let's now get into your questions for me this week. Now, the first question we have today is from Stephen, who says, "Hi Dale, great show as always. Could you please share your view on Novonix? My point of view for this stock has the criteria to retest all-time high based on the last closing price of monthly and weekly chart. I've identified the technical confirmation, or have I identified the technical confirmation correctly? Thank you very much." So let's go and have a look at this stock. Looking at the technical confirmation, no, you're incorrect. There's a lot more to it than that. What you've just done is saying, okay, well, here's the last monthly bar. This is the current monthly bar. That's the previous one. So July's monthly bar, that's a weak bar. That's not super strong. If I look at this, you can see whilst it did range very, very strongly, there's 32.88%. See that close there? That's right just underneath the text there. That just shows me there was some weakness later on in the month there. Currently, we're looking here at August. You need a lot more to confirm this. So it's a big move here, another 16%, with currently the close there is up 13% on that bar. I mean, not from the closing price on the month before. This month, you'll see it's up something around 17%. But that does not necessarily mean that it will go through that high. It does not, and that's a nice strong bar here on the weekly chart, so I agree with that. But again, it was slightly weaker in the last few days. So if you look at Friday, that's this Friday's bar there. You can see it came right back on Friday. Indecisive bars, all those three. So there's a lot more analysis to be made. Is it bullish? Yes, it is bullish. Yes, I agree it's bullish. Will it challenge and break through that all-time high? Not necessarily so. It could be just a move up before it falls away again, and we see that with stocks all of the time. It's a little bit more of a liquid stock. You can see there 44 million shares for the month there, but we had a big move down in here, don't we, from that all-time high down to there. That's 55%. This could be just a move back up and then fall away again. I'm not saying it's going to do that, but this is what you need to be careful of. Often people buy into a stock, it's risen up here and they think, okay, now it's going to go through the roof and it's going to be another huge move. But it could easily do that. That's the other opportunity, because people are saying this move from this sort of low through here, and they see, hey, this stock went up 338%. It's going to do it again. I better get into it. And that's this whole greed mentality a lot of people in. Now, I haven't looked at the fundamentals. I'm not a fundamentalist, and I know you people that watch this show and go, okay, well, you haven't talked about its fundamentals and its P's and EPS and dividend yields and debt to equity and all the other fundamental metrics. What Janine and I do, we're very much technical analysts. Yes, we do look at those. But I'm not looking for your questions. I'm not getting into all that stuff. We do that with our clients, with our portfolios we do manage. We look at fundamentally sound companies. Your job is to do that. I'm just giving you a technical view on this, and this could be just exactly what we're seeing here. Or I'm not discounting it's going to go to an all-time high, but what you need to understand is what you've done is just a very, very, if there's 100 pieces to the puzzle to work it out, or whether this will go through its all-time high, you've probably done 10. That's all I'm saying is you've done a little bit of work that could indicate it's bullish, but it's no sort of confirmation of it, and that's really what I'm trying to say. But great effort to trying to do that. If you do like it, you've done the fundamental research on it, and you own it, I'd be sticking with it right now if you own it. If you don't own it, I'd be looking at whether you want to get into it and what the possible upside is for you. Because if it does move up through to that sort of area, through that previous all-time high, there's a little bit of room there, a little bit of wriggle room. But I would suggest looking at the chart that if it is going to turn and to go down, it will do that fairly soon, probably in the next month. You'll probably see it hit some resistance and start to fall away again. And that will be the signal. So you might choose to just wait a little bit if you like. I don't know. It's up to you how you want to run that one. Next is a question from Birdie who says, "Hey Dale, I'd love your opinion on NAB if you think it can break out of the 6-year downtrend line. I'm not currently holding, but rather I'm interested in seeing what occurs at a long-term resistance level for a big stock." So let's go and have a look at National Australia Bank. Most of all the banks, the banking sector, as Janine and I talked about last week on our live show last week on my report, is it's way below their previous highs back in 2015. So this big long-term downtrend is really what Birdie's talking about. If we look here on, there we go. Look at that, from that high there at 37.78, we're talking about 59 months. National Bank fell away, and it fell away 65% in price. So that's really what we're talking about through here. What Birdie's talking about, if I just use a basic trendline tool and draw a line across here, he's saying, this breakout of this longer term trend line. And you can see here, I just really roughly did that. If I just drop that up a little bit, you can see it just barely closed above here, closed below it, and now it's moving through it. So what he's asking is that, does it have the legs to get through this? And I think it has. I really do think it's got some legs to get through this, and I think we should keep seeing it move up, because the banking sector really has lagged behind the marketplace, and materials. This is why our market hasn't performed quite as well as the Dow and the S&P 500 over the last sort of 5 or 6 years. And a lot of people think, no, because the US market's better than the Australian market. No, it's not. Statistically speaking, over 100 years, the Australian market outperforms the US market, because what most people don't see is the US market has many years where it goes sideways, and it's done that numerous times. Our market just steadily moves, and so a stock like this hasn't performed well because we've had all of the regulation around FOFA and after the GFC, all of that sort of stuff coming out here. But NAB is looking really good at this point in time. So let's go and look at the weekly chart. So I do agree with you, Birdie. I do think it's looking good. I think this is a nice pattern. We've had this sort of sideways move since March through here. It's really not fallen away too much like a lot of stocks on our marketplace. That's the high, most recent high there of, we could put my pointer onto it. I've just used the wrong thing, used the wrong tool. So we've got the high there of 27.84, and I would think if it does get through that so high, I think where it's going, and I just used the wrong tool again. What are you doing, Dale? That's the one I want. It came down, you can see here it came down 9.91%. Remember I was saying that I wanted to get sort of 8 to 12% falls, and this is what this stock has done. If you look at that high down there, you can see here's a 20% fall. So it's had a fall, big fall down into September 2020, not such a big fall down here into January 21, but you get stocks moving down, and this one's about 7.8, so it's nearly 8%. That one's nearly 10%. But I was thinking if it does get through these sorts of levels, that level there, if I just delete that, let me get there. So if it gets through 27.84, I think you're right, mate. I think it really can move through, and I think it's a nice looking stock. So well done for bringing up National Bank. I don't think anybody's brought that up for quite a number of, a long time actually. But I do like the banks. I think CommBank's been moving very, very strongly, and I think it's probably starting to get to the point where it's getting to that place where it's probably not going to push a lot higher. So start looking at some of the other banks, and National Bank's one of those. Possibly ANZ might be another one. But I do like Macquarie Bank as well, what they're doing, but they've been running quite well at this point. And so you do need to look at the banks and say, okay, which ones have run, which ones haven't run, which ones are lagging behind, which one should I be looking at? So do look at that, and look at Westpac as well. But I do like the stock. So well done, Bertie, for bringing that one up. Now we have a question from Chris, and Chris says, great video. Thank you for explaining things, even though you've covered similar content in previous videos. It's pretty much what I do, and I was actually only chatting with an expert the other day in the US, a gentleman called Jeff Link, for our Talking Wealth videos that we do for Flix, FLIXX.net. So if you haven't seen Talking Wealth on Flix, go over there if you check it out. We do 2 videos for that every week, and I'm interviewing experts in many different areas, not just the stock market, financial planners, money coaches, business people, entrepreneurs, people on psychology. I had an amazing interview with a lady called Rini Cavallari, and we talked about head trash, about how to get rid of the head trash out of your head so you can be far more successful. And I suggest people go and have a look at those videos. It's on flix.net, FLIXX.net, so go and check those out. But looking at that is we're seeing, when I was talking to that expert, he just said, he said to me, when I first met you, Dale, you kept saying to me, I'm going to need to be saying the same thing over and over again, the more basic stuff. He said, you're right. I keep having to say all the same things over and over again. And I say to him, that's because you need to, because the solid foundational stuff is what we have to continue to do. Whether you're building a house or doing some work on your car or working at home, you have to do the same basic thing to do a job properly. So there's certain things you have to do. If you want to build a house, you have to dig foundations and put those in. If you don't have solid foundations, the rest of your house is pretty wonky and it'll fall apart. Same with the stock market. If you do not have the foundational skills, then you're going to be far more hit and miss with your stock market trading and investing. You're going to get wrong a lot of times. You won't be able to get your buys right or your sells right, and more importantly, you won't get your sells right. And we see that all the time. So you're going to hear me keep going over the stuff over and over and over again. And real traders and the real good traders love it listening to us, because we bring them back to those foundational stuff. Because sometimes we can get a bit cocky, can't we, guys? And we can get a bit more ego into it and think we're better than what we are. And it's always about bringing ourselves back. But anyway, it goes on to say people like myself would have no idea about what you're talking about if you didn't explain the definition as you're talking about. Now, I'm new to investing. I've done some research and I've been mainly going off other people that are much more educated than me. I really wanted to stop there on this question and say to you, please do not ever assume that somebody's more educated than you, especially if you're looking at YouTube or something like that, or those public sort of social media type, TikTok, etc., etc. If you're looking at experts from and you're subscribing to expert newsletters and expert commentary, then that's a different thing. But if you're looking at things that are free on the internet, then please don't assume that, because I seriously have seen people in their bedrooms, all they've done is picked up a book and read some of the book and then done a YouTube video about it, or they've got research from a broking house and they've basically just read the research from the broking house. They do not necessarily have more knowledge and experience as you. It's a big mistake that would-be traders and would-be investors do, is they get on a chat forums thinking they're following somebody else that's better than them, that they must have done their research, they must know about this stock, so it's okay for me because they've done all the work. No, do not ever assume that. Always know yourself, and always do your own research to make sure that you know what you're doing. If you don't, then you're going to get emotional. You're going to emotionally buy, and then you're going to emotionally sell, and you'll panic. You'll buy stocks, and we've seen it so many times on this show and on our live show where people have bought CREP stocks and then they're losing money because they got the tip off a chat forum or somebody on YouTube. YouTube is one of the worst places to get your stock market education and information from. It seriously is. Yes, I'm on YouTube right now, but I'm an expert. That's what I do. We're fund managers here. We've been teaching people investing and trading for more than 2 decades, I have, and we're a fund manager managing tens of millions of dollars. So I'm an expert, but somebody in their bedroom or their lounge room or their kitchen in a t-shirt, not necessarily. That's all I'm trying to say. So please don't put yourself down. It's just about gaining that knowledge and that foundational information and education that you do need. Now, he goes on to say it seems that this company has good financials, trajectory, and a unique product in their market. It's called MME. He's invested $30,000 and currently up 60%. I was thinking of just taking out my capital and letting the rest run, but not a bad idea. He goes on to say, but then I have a belief in the company to keep climbing and I'm not sure what to do. That's that whole emotional tug of war that you're getting into because you've bought into it. You've bought in not knowing necessarily why you bought in it. You've taken somebody else's tip. May have been a broker, could have been something from a chat from, I don't know, because you don't actually tell me who the expert is or who the perceived person that has more knowledge than you is. So if you'd done that, I might have been able to help. But right now you're up money and you're saying, do I take my capital out? Never a bad idea to take your capital out if you're worried about it. Then you're only playing with the market's money, so your capital's out. But then you also think, well, if I take it out, what if it keeps running? And that's the question that's probably in your mind. I could make another 60%, so I'll be up over 100% there. But what if it falls away? And this is the big question a lot of people have when they're talking about stocks is, especially if they're making money, they're fearful of losing profit. And that's really what it's about. That's exactly why you need to have stop losses. Because while you have a stop loss, you never need to worry about the downside risk. It's only downside we need to worry about because if this stock continues to go up, I'm sure you're never going to be stressed about it the more it goes up. It's only going to stress you out if it starts to move down, and therefore you need to understand what that downside is and where your line in that sand is. And it's like going down, it's like being on a push bike. If you get to a top of the hill and you look and there's a big hill down there and you don't have any brakes on your bike, what's going through your head? How am I going to stop? So it's about the what ifs you've got to think about. So this may be still going halfway up the hill at the moment. You may not reach that pinnacle yet, but eventually a stock will come down. So just make sure you've got a stop loss. If you don't know how to do one, just grab my book, Accelerate Your Wealth. It's your money, your choice. Please grab a copy of that. It'll give you some ideas around stop losses, how to enact them, why you've got to do them. You can also still get my first book, which is called How to Beat the Managed Funds by 20%. It's a bestseller here in Australia. You can pick that up for free. Just pay the shipping. Homepage of our website, top left-hand side, click the button. The girls will send it out. If you can't find it, just give us a call on 1300 858 272 and they'll send it out. But really, well done for asking the question. Well done for doing the research. Well done for being brave enough to ask me that question. So please start educating yourself because knowledge is the enemy of fear. Now let's get into the charts for MME. It's looking all right, mate. It really is looking really, really well. So I think at this point in time, I wouldn't be too worried about MME or Money Me. We had a big dip through here, which would have stressed you out probably a little bit through there from that high down to there. And you can see the big move of 25%. So it's a big mover. So it's probably, if you don't know what you're doing, it's probably not a stock you should be trading. You should be in bigger stocks, which will be less volatile. But right now, that's showing a bit of weakness through there. So if last week, so I'd just be careful. If we start seeing downward weeks from here, then I would be looking at exiting and definitely putting my money in. That's where I said to you, need to put a line in the sand there on where your possible exit strategy is, because often we see stocks that move up and down, so they do move in the directions. If I go through here, you can see here they move down to go back up again, but on the other side they move up to go down again. So they just move down, up, down, up, down, up, down, up, and the opposite on the bull run. So we just need to, because of that weakness last week, I'd love to see a nice green bar with a strong close high up on the bar this week. If that's not happening, then I would just be very, really careful with my money. Now, next question is from Matt, who says, "Hi Dale, I love your show. You've helped me make some solid decisions over the past few months. What are your opinions on WWI or West Wits Mining, please?" So let's go and have a look at that stock, West Wits Mining, now for this person, and they're asking my opinion on what I think of this stock. Look at that. It's just travelled along for like 8, 9, 10 years. Now, yeah, it's a reasonable range that it's travelled along. If I go to there to here, you can see big move, 754%. That's why people trade it. But looking at this, it's a tough stock. So, and it's moved up very, very strongly more recently, and people are probably sitting there going, well, it moved up 3,650% between November 2019 and March this year. So now it's cheap. And cheap is not necessarily what it is. Yes, it's a lower price. It was at 14 cents. It's fallen 60% in price. Right now, this thing hasn't proven it stopped falling. And so I would suggest they'd probably be talking about this in chat forums and whatever else, saying, get in now, it's cheap, it's half price. But if it's fallen 60% from that high there, then I'd suggest it's probably likely to fall down somewhere to around below that sort of 5 cents to 3 cent market, but it may not. If we don't see any strength through here, then I'd suggest it's probably got further to go. So again, I don't like it at the moment. I don't think it's as good a great stock, but that's fine. It's up to you how you want to, whether you want to, how you want to trade it from here. But again, without being rude to you, if you're asking this kind of question, it's probably not a stock you should be trading. That's really all my thinking is a lot of people going for small stocks trying to make big bucks out of it, and you're going to get it wrong more than you're going to get it right. You'll get your timing in and out wrong, and then sometimes it will cost you a lot of money in losses. Other times you'll get stuck in something that's going sideways or nowhere. Other times you'll get into them just before they peak and they'll drop away. There's all sorts of different things that I see mistakes a lot of people make that are unnecessary if you understand what you're doing. What great questions we've had today. I thank you very much for everybody sending those questions. It's some really great questions. And as I've mentioned in the past, your questions really do determine what happens on this video. I don't know what you know and what you need to know, and it's your job to pull it out of my head. Am I going to teach you how to trade the stock market on YouTube for free? Zero. No, never going to happen. You need to do my courses for that, for me to teach you properly, because it's just not possible here on YouTube to do that, to break everything down. Whilst I can explain a concept in a few seconds, like a trend line, doesn't mean you can draw it. And that's the problem with YouTube. You have to, and to me, I've in my book is like 30, 40,000 words in my book. For me to teach you how to draw a trend line, that's a whole book of text. That's another 40,000 words just to break it all down properly for people so that they can do it, and they can do it consistently, but they can consistently do it correctly. Because practice doesn't make perfect. Perfect practice makes perfect. And I find a lot of investors and traders, they do things, but they're not practicing perfectly, and therefore that's where the inconsistencies and mistakes happen. So please, if this is your video, you can ask me all the different questions that you like. I'm looking at stocks or answering different questions on the stock market for you to help you get a broader understanding of what you need to do. So again, you control what's going on here pretty much for the second half of the video. Now, in essence, the better the questions that you have, guess what? The better the answers you're going to get on the video. Now, if you do have questions that you'd like me to answer, don't just sit there and be passive. Get moving, get off your ass and get typing and put your questions down below so that I can answer them for you and help you out. Remember, here on this channel, we do these Monday market reports every single week. We also do our live stream every Tuesday night, 7 to 8 p.m. We hope to see you tomorrow night as we ask some more callers to speak to us live via phone call on the Australian stock market show. That's right, tomorrow night we're going to take some callers via the telephone where we can speak directly to Janine and I and ask us a question live on the show. So hit that subscribe button now, click the bell on the right of it so you know when we upload our videos and go live. I'm Dale Gillham, Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.